We have Zhong from CoinGecko. We'll be sharing Q3 crypto industry report. Let's give him a big applause. Thank you.
Yeah. Okay. Good morning, everybody. Thanks for coming. My name is Zhong. I'm the head of research here at CoinGecko. I think we're going to just start because we're running out short of time and stuff like that. So I think when Ross introduced the event, if you were in the other hall, he actually said that we're not going to talk about the price today. And actually, it's not very true, because I had to, what else do you come to CoinGecko for, right? To look at the price. So, so I promise you, this is probably the only session that we're going to talk about the price and some of the other things. But yeah, I mean, just wanted to take you through this report. You are getting a sneak preview. We don't publish this report until 2 weeks from now, but we rushed it out for the event. Obviously the full report, if you have not seen the past ones, the full report is 50 slides. I'm not doing 50 slides today. This is just a quick run through, obviously tailored for people here, since this is ETHKL. And yeah, let's just get into it. There's only about like 10 slides. Yeah. So this is what the market looks like at the moment, at least from up to Q3, starting from this year. So I know a lot of people still say, "Oh, bear market, bear market, bear market," right? It is that. But actually, if you look at the chart, right, and if you start from January, we're up about whatever the slide says. It is 35%. So yes, Q3 is a down quarter. It's down about 9.63%. But overall, I think for the market, we're actually up about 35%. Surprisingly, one of the big gainers this year is actually Bitcoin, the granddaddy of all. There's up about 60% year to date, even though again it also fell slightly in Q3, right? Some of the other things I did mention in the notes. I think the other thing to point out is obviously you can see the purple part of the slide. Volumes have fallen off a cliff. Exchanges, I think if you're in the audience, I think it's been a challenging 9 months. To be honest, probably started from 2022. It's been quite challenging. Average trading volume has come down to about 30-ish billion daily. Yeah, so I think from that perspective, it's not doing great. But otherwise, I think, despite, I would say, a 9.63% decline in Q3, actually the market, from a return perspective, is up about 35% this year, which is better than last year. Zooming into Ethereum, actually Ethereum is doing pretty much in line with the market. You'll see that it's also up about 39.6%, slightly outperforming the market for the year. It is down 13.6% in Q3, but yeah, after 2 quarters of gains in the first half of the year, this is, I would say, probably characterized as some level of consolidation. A lot of the dip, as you can see, happened in August 17. Don't really know why. It's a strange dip. I think anybody who's watching the market, the only 2 things that happened that day was that there were rumors that Elon sold some of his Bitcoin again, and then Evergrande, the Chinese property developer, filed for bankruptcy in the US. Not really things that you expect to affect the price of crypto, but that's what happened, and that's where we are. Pretty much after August 17, it's sort of flat, and we sort of stayed there. I think just a few things to point out that happened in Q3, really. Yeah, there's EIP 7154. We're going to talk a bit more about this later, but essentially there's a new EIP that's being introduced to limit the number of validators coming onto Ethereum because of people start worrying about finalization issues. This is supposed to be in Cancun, but I think we're going to talk about that later. Other than that, I think layer 2s are sort of a trend, and you can see lots of layer 2s are being launched in Q3 alone. That's the list. Some of them are here with us today: Mantle, Linear, Base, Shibarium. Still a lot of people building layer 2s. I think Scroll just launched very quietly last week. And there's a few more to go. I think people outside like Taiko and stuff like that, they're still building. Yeah. Moving on, this is staking. So probably one of the big buzzwords for Ethereum in 2023 and 2022, pretty much ever since Ethereum underwent its merge. And you can see now that there is about, whatever that number is, I really can't see. There is about 27 million ETH that is now staked in the protocol. If you count that against total circulating supply of ETH, that's about 22% of all Ethereum that is now staked in the network. Obviously, this is a combination. So the big purple chunk is actually people that we don't know. These are actually solo stakers or stakers that have chosen not to declare themselves onto the market. But I think lots of people talking about LSDs, right? So liquid staking protocols, liquid staking tokens, liquid staking derivatives. You can see that we put up some of the logos on the top right. Lido is the leader, 32%. Some people in Ethereum are losing sleep about that. Coinbase is in second place, and third place is actually something called Figment, which may not have been on your radar. So actually they added a significant chunk of stake ETH. They are really a more institutional focused provider and really shot up the ranking. I think they were like 5th or 6th last quarter, and they're now like 3rd. Other than that, you can see the other normal suspects, as you would expect: Binance, Kraken, then Rocket Pool, yeah, and so on and so forth. So I would say it's a healthy development. In fact, it's been too healthy, and that's why the EIP came about, to try to slow this increase in the number of ETH being staked in the network and the number of validators coming online. However, after they announced the EIP, actually the queue has fallen off a cliff, right? So if you understand how ETH staking works, actually there's a queue for validators to be activated. At one point, it was like you have to wait like 2 weeks or something. Right now, or even a month. I think the longest one was 46 days, if memory serves me right. So you can't just plug into Ethereum and decide to be a validator. There's sort of a queue to join. Right now, it's down to half a day, 0.6 days. So it actually shows that maybe this is going to plateau after really a big run up ever since the merge and ever since Shanghai upgrade. So yeah, but otherwise I would say still healthy growth going, and I think it's going to go on for at least a few more months. Lido is the elephant in the room, I guess. Another interesting thing I think is Ethereum burn, EIP 1559, and I think good news for all the ultrasound money narrative supporters, I guess. Since the start of this year, Ethereum has been deflationary, right? So actually, there is less Ethereum in circulation now than there has been at the start of the year. So you can see the green line is the burn, yellow line is the emissions, and in the first 2 quarters of the year, the burns have significantly outstripped emissions. For Q3, we see a slight return to inflationary, but you can see that pretty much is around there, and that is really because activities on chain have sort of reduced quite significantly in Q3. So yeah, in deflationary Ethereum supply, you will see that some of the usual suspects are on the bottom, to who are the ones that are causing most of the burn. Interestingly, I will point out, Uniswap being the dominant DEX or AMM on chain is obviously number 1, but you are seeing that some of the, like ZK Sync, Arbitrum, some of the layer 2s are starting to make the list. They only burn Ethereum when people bridge over to their layer 2, right? So them making the list is a sign that people are moving their ETH off the mainnet onto those layer 2s itself. So good news for adoption. The people that have fallen off the list that we're going to talk about in a bit is NFTs, unfortunately. So OpenSea used to be on the list, but now it's kind of off, and it's a sign of what's happening in the NFT market at the moment. I did want to put up a slide. So this slide is not in the final report, but I did wanted to put it up. I think this is a good measure of where we are from a layer 2 adoption perspective. You can see the gray line, the only straight line that runs through this is Ethereum number of transactions. And pretty much Ethereum has been at that level. And then you stack up all the layer 2s that have launched, right? And I chart this from the start of January as well. So this is 2020, I think 2023. Yeah, I think it's a good sign. So, it shows that the layer 2 thesis is sort of working. People are actually migrating off mainnet, which is expensive, which is kind of slow, onto layer 2s, right? Which are supposed to be more efficient. People are building more apps and stuff like that. Obviously, the darling for Q3 is Base, right? That's run by Coinbase. They really, I think, had a very successful launch and then really surged ahead in terms of number of transactions. But people like Arbitrum and Optimism, which launched way earlier, have actually also seen pretty good traction and are still pretty dominant, right? So good signs, I think overall, and really I think since the start of the year, I think I say March or April, the total number of transactions on layer 2 have completely outstripped the transactions on mainnet itself. So this is all good for layer 2 adoption. Oh, I see Matthew there. So all the data come from you. So if it's wrong, it's his fault. Yeah, but yeah. But yeah, I think yeah. So pull this up. Yeah, just to give you guys an idea of where we are. And I think just the other thing to point out is probably like there are days now where a single layer 2, the number of transactions on a single layer 2 can completely outstrip the number of transactions on Ethereum already. We've seen that happen with Arbitrum, and we have now seen that happen with Base as well. So again, good news for layer 2s. Moving on a bit to DeFi, I believe this is a breakdown of TVL. So it's quite hard to measure DeFi. TVL is an interesting one. I tend to tell people it's not the best, but it's the best that we have in terms of trying to measure adoption of DeFi on different chains. It's interesting. Well, as you may expect, Ethereum is in the lead. It's about 70%. I think it says 69% as of September. And you see that beyond that, I think the other chains behind that are also EVM based, right? So it's a testament to the ecosystem. It's a testament, I think, to the success of Solidity and the whole EVM movement, where a lot of the development or a lot of the adoption of DeFi, I would say, is happening on one EVM chain or another, right? What I would point out is also interesting is you look at Ethereum and you see 70%, but actually it's because we count LSD as part of this TVL. So because of such a big adoption of LSDs, they make up a big chunk of this percentage, but it's about 20 odd percent. So if we actually strip that out, and I didn't chart it here, but if we strip that out, actually, we also do see DeFi TVL migrating off mainnet onto the layer 2s as well, right? So that is again good news. I would think good developments for the L2 narrative, I guess. Yeah. Overall, I think it's slightly down by 77.6%. Not that big of a drop, I would say, compared to markets. Pretty much in line with market, but yeah, I think just interesting things I want to point out. The other thing that is sort of making a comeback, I would say, point out at this point is Solana. We are seeing a resurgence of that close to 1 year now after FTX collapsed, right? And Solana was very closely associated with FTX, but it seems like they have managed to survive the worst of that and are making a comeback. Also interesting is, Maker talking about now wanting to build a SVM, a Solana VM layer 2 on Ethereum, right? So it's going to be interesting how that's going to play out. From a breakdown in terms of sectors, okay, I'm running out of time, but okay. From a breakdown in terms of sectors, this is sort of the bubbles that you would expect to appear. I think no surprises that decentralized exchanges or AMMs are still the most popular sector within DeFi. And then followed by lending. I think LSDs, liquid staking, has gotten pretty big as well. But the narrative this quarter was really oracles, right? Really saw significant growth. Most of you would have heard of Chainlink, right? I think doing a lot of good work, and that's also being reflected in the price, even though they are not the largest gainer. The largest gainer is something called Telor within the Oracle ecosystem. The other one are real world assets. I'm going to talk about that slightly in the next slide. But yeah, it's another emerging trend and emerging, I would say, segment within DeFi that we are tracking here at CoinGecko. Yeah. I want to point out two major trends in DeFi. I don't have charts for them, but hopefully give you an idea of sort of what's happening. You're going to hear from some of them outside as well later in the conference, either today or tomorrow. One of them is LSDFi. So since we have LSDs already, right, we have liquid staking tokens that are liquid, then they can be part of the Lego, right? So LSD is the main core primitive, and people are starting to build stuff on top of it. You can see the slides. I won't drain the slides. I think the main one is Pendle. I think TN's going to speak from Pendle, is it? Great. I think TN, which is one of the founders, is going to speak tomorrow. He'll be able to tell you more about that project. The other one that's pretty big is Libra. So on the top right corner, Libra is a LSD-based stablecoin. So it's a stablecoin that now is backed by LSDs and gives you the yield from those LSDs as well as sort of like an interest. So I think it has about 200 plus million TVL. Pendle is sort of 100 plus million. The other hot one obviously is EigenLayer. I think that's an emerging narrative as well. People are talking about restaking. So after you stake it once in the protocol, what else can you do? Can you stake it second time, stake it third time, stake it fourth time to use it to secure other apps, right? So that's also something that's quite interesting. The other thing to talk about is real assets. Really, it's the continued integration, and I think continued integration of real world and what we call TradFi, right, traditional finance, with on-chain Web3, crypto and DeFi, right? So you can see the projects. Most of you probably familiar with PEXG, right? Those were the start of the just tokenizing gold. But really now, I think the big trend is on the far left corner, treasuries, right? On-chain treasuries. They now have about 665 million market cap on-chain. Surprisingly, I think it's the old guys, right? The traditional guys who are leading the charge. Franklin Templeton, which is one of the biggest asset managers in the world, is like half of that market cap. It's like, yeah. So I think it's a huge validation of the TradFi world starting to embrace more, right? Just when we thought like we're going to where crypto like degen people are during winter, the TradFi guys have woken up, I think, and are starting to actually embrace this in a big way. The big names like JP Morgan, BlackRock, all have more or less talked about tokenization at some point, and you're going to see this sector, I think, grow even more. Talking about treasuries, I will point out that I said about 665 million in TVL, in market cap. Half of that actually on Stellar, but the other half is pretty much on Ethereum itself. Yeah. NFTs, don't really want to talk about NFTs. It's sort of like punching down at the moment. Sorry about that, but I think pretty much it's one of the sectors that sort of boomed in 2021, right? And it's really going through its first bear market cycle. So I think people are still trying to figure out what to do with NFTs, beyond PFPs. We have seen some success. I know there are some Pudgies in the audience. Congrats to you guys. But by and large, I think market is down pretty bad. I think I didn't put up a chain breakdown chart, but I think you can see from the names. I mean, Blur is still in the lead, and OpenSea is close behind. Most of this are built on Ethereum. Oh, okay, 3 minutes. Okay, there is a timer. Okay, about to finish. So yeah, bad times for NFTs. Really, not much to see. But yeah, I mean, I think a lot of the interest or a lot of the focus right now is really on Blur, right? And to a certain extent, its lending platform, Blend, right? And seeing how they will continue to duke it out for market share, whether continuously giving people airdrop of Blur tokens is going to work, or is just gonna all run out. The impact of it anyway is gonna run out at some point. Yeah. Lastly, I think I want to close out. I have some slides on exchanges because these are still pretty important in our space. And this is a chart of spot centralized exchanges. I already mentioned that volumes are down by 20, are down this quarter. And on spot centralized exchanges, these are down by 20.1%. The big thing I will point out is Binance losing its market share now. It was always above 50% for a long time, but now this is the first quarter that it has fallen below 50%. Yeah. If we move on to the decentralized bits, I think maybe more relevant for Ethereum builders today. This is how the decentralized landscape for AMMs look. They are down a bit more compared to their centralized counterparts, about 31.2%. But you can see, I think, like Uniswap is the undisputed leader right now and has been for a long time. We aggregate this across different chains, so this is not just on Ethereum. So, you know, multi-chain or cross-chain deployments of AMMs have been a recurring theme for a long time, and you are seeing that impact actually play out. You know, they have been able to gather market share not just on Ethereum, but on places like Polygon, Arbitrum, Optimism, and those things as well. So, yeah. Other things to point out, not really. It's like, yeah. I think this is the last one, so just give me 30 seconds to wrap. Activity, right? So this is the last one. So it's the same chart from before. I just layer on a chain view instead of the individual protocols. I think no surprise that Ethereum is still dominant. You're seeing some of the effects, I think, of Arbitrum's airdrop wear off, right? It was peak in April when, you know, the airdrop happened, and it sort of have moderated over time. And I think it's going to be interesting to see whether, you know, it can sort of hold on to its position as number 2, I would say, right? So it briefly overtook BSC, right, with a traditional, a more traditional number 2, but now they are pretty much neck and neck as of September. So yeah, this is the end. Quick summary. Like I said, going to be published in about 2 weeks. Do watch out for it on our website. Hopefully you guys are all CoinGecko users. If you have any questions, I guess I'm hanging around for a few more hours. But yeah, thanks, and pass on to the next guy.
Okay, round of applause for Zhong from CoinGecko for sharing so much insightful